Oh, hello, folks. Hey, I want to take a look at the S&P 500. I haven't drilled down in quite a little bit, after having COVID and all. So, hey, at the end of the presentation, please review our disclosures. Now, sometimes I find the best thing for us to do is just go back and look at a clean chart and get our visual and really decide where are we, And, the first thing that I like to do when I'm looking at a chart is I like to get my visual where my trend support is, trend resistance, etc., so I can get a good visual on what may be the case as far as an extension. So in this scenario, our prior trend support, then of course our trajectory changed, our slope changed, so again we want to look at that again, and now again our slope has changed again. Now this is a very basic concept in trend. So trend support, which started down here in the beginning of our trend, in reality, unless we break that support, we extend this out in time as an example, and I throw up an alert there. So our trend support for this entire up leg since 1980 is not broken unless we close below 840. Excuse me. Now, same scenario for our secondary trend, close below 26,780. Close below 387.85. Now that is our number. Now that is way the heck down there from where we are. That's more than 500 points lower. So at some point, I suspect that trend will break. I was hoping we would get 50% back of this particular trend here because it would really give us more euphoria to the upside. But I wanted to also spend a minute here on RSI, and just look at where, this in our leg is our confirmed high. Now, the one thing that occurs in Elliott Wave and how that connects to RSI, how that connects to Fibonacci extensions, and how we want to look at it. So each one of our legs, we're going to have some kind of divergence to a top or divergence to a bottom. Okay. The cleanest way to have that is when you have a confirmed high, but quite often your confirmed high is so far back. I mean, it's 2023, and our confirmed high on the SPX, S&P 500 on the 3-month is way back here at 1998. How the heck are you going to trade that today? So what this is where my mound thesis really originated, is because I started looking out in time on the indices, and hey man, I'm starting to see these larger patterns related to RSI and topping patterns in Elliott Wave. So right here we're looking at a super cycle ABC pattern, which brings us up to 5.23380. And I noticed Tom had been posting some comments in the room that, I just can't believe it's going that high. I have all this support and resistance there. Well, throw your magnets out the window when it comes down to euphoria or fear of loss full. Because reality is it can pump a lot higher than we ever expected to, and it can crash a lot further than we ever expected to. Hold on, I got a little tickle I'm trying to shake here. So looking at today's RSI, so we have sort of a topping pattern here. So this is drive 1. This is drive 2 right here on our high here, with no divergence on that, at least on the 3-month anyways. But let's step down to the monthly and look at where our clearly we have some divergence as far as the topping pattern here. And this is what I do basically. Even though I'm seeing it, I'm marking it for you guys, just for your visual. So, looking at this top, okay, we got a nice drawdown on this leg. What I'm always saying is I want 50% back, and that's going to take some of the pressure off. So if I was going to use a Fibonacci extension tool, which I am here, and I'm measuring my peak, my trough, and my peak, and then I'm putting in my inverted template just to give us a visual. So, that initial retrace, 50% back is a given, okay? Close below the 78.6, then really the next spot we're looking for is maybe 100. And it happens to be right at our 50 days. So right now our 50 days held. 50-day breaks, the next spot we're looking for is 50% between the 50-day and the 200. So we're looking at for the 150% fib back. So if this rejects, which it could be, I mean, this could very well be, everybody's screaming, yeah, it's an ABC, it could be. I'm not saying it's not. What I'm saying is, the preponderance of the evidence at this point suggests that it's more of a flat than an ABC. So I would suspect this just comes in a little bit higher like this, or maybe something like this, or builds out a wedge, and maybe something, as far as a triangle. Hold on a second. Got to get rid of it. Well, let me put that much up there. Maybe something like a triangle. I mean, it could even become this 9 wave out, So I mean, we could, really do quite a little bit here just in this flat, which is why I am directional, because unless we get the flow to get us up and above this, hold on, I don't have now let me go down to the weekly if I can get my price. Okay, when all else fails, do something else. For some reason, my clicker is not working. I don't know why. This data that I get in here just doesn't work after hours. It's like 5 o'clock in the morning. So, hey, now, so, we had this high of 481862. So, this is still acting as resistance for us. So this band right here is really what we need to get through. And this might take us a little while. I mean, we might reject it a little bit. So right there, that is our resistance band that we need to get through between that 467703 and that 481862. And, we could reject that and come lower. And we could put in that, extended thing, triangle like I spoke about. Getting back on base with the RSI, though. So, our difficulty here is if you look on the monthly, we have a completely different view in RSI than we did on the 3-month. Right back here is where our 3-month was, January 1999, and we've got a January 2016 confirmed high here on the monthly. So we have some divergence in the view of where our counts are. Let's come down to our weekly. I'm just going to squeeze this down because I want to look at where my RSI is. Now we have some confluence between the monthly and the weekly as far as at least in the pattern, but yet we still have another divergent spot. My point here is sometimes you have multiple views. In other words, you have confirmed high on the 3-month, the monthly, the weekly, the daily, even, et cetera, et cetera. And so your price, there's some skew in price between your time frames. So that's something we always want to consider. But jumping back to the monthly and looking at where our topping pattern is. So I'm fairly convinced that we can consider this high our confirmed high. So we really didn't have, actually there are two different patterns here. And this is where analyzing RSI can be challenging because, you really don't want to exclude that leg. Okay. But yet you have another leg that is really just as important here, which is broader on a deeper time frame visually, okay, and in price. So we're looking at a monthly chart here, but I'm basically saying, hey, this was a very important top, so this leg to here, and I'm just going to use a regular Fibonacci tool just to give me some space. But this was our retrace, and this is really where a lot of my thesis is in retraces. So, I'm looking for 50% back of this leg all the time, 231.42. We didn't get it. Shallow retrace. Didn't get to the 382. So we didn't confirm a downtrend. Didn't confirm it there. Okay. But yet, if we go to the end of this leg, which is really up here, and now we measure this whole leg, and we, from our 50% on our RSI to our peak, right? And then the end of that leg, because realize even though there's divergence here, we're still pushing in price. Now we get 50% back. See, and this is where, this right here, this was very challenging from an Elliott wave standpoint. And it still today, it's a quagmire because it's such an outlier event. It screws up all the measurements. So, to a certain degree, when we're looking at this, we sort of have to exclude that as a 300-year event kind of thing, or 200-year event as an outlier event, simply because the likelihood that something that's going to occur again, I think is fairly slim with the federal government shutting us down, unless we have a worse pandemic than COVID. I think it'll be much broader and deeper if that does happen again. So, but in the history of the tape, we've never had a shutdown. So that also puts a skew on how I'm looking at, so I'm bringing in that macro micro thought with what I see in the Elliott wave counts relative to RSI and the Fibonacci extensions. And I'm saying that when I measure my next leg, I want to be conservative. So I'm going to come in and I'm going to go right to my 50-day, my off number. And I just want to measure where is 50% back. We got 50% back on this retrace. So to me, it's done. It is done. It is done. So now let me just take some of this stuff off here and get to my conclusion of my thought. So now looking at these potential outcomes, I want to bring back in all my waves, and then I want to come out to a monthly chart, and I want to get a visual here of what our count says we're doing. So first we have an intermediate wave around 4862. That's in play here. Close below the 2. I'm just going to move these around for time's sake. Close below 4335.31. The count changes. Then we have to look at what that count is and decide where we're going. You have to realize that Elliott wave, it's not just a map, it's a living map. So the roads are moving. So one pattern creates another pattern, but it ultimately is measuring buyers and sellers euphoria, which I call FOMO on the upside, or FOL, fear of loss, on the downside. And the one thing that doesn't change very much is human emotion. And realize trading is emotional. Winning money is emotional. Losing money is emotional. So that's the way that we want to look at Elliott wave. It's not etched in stone, but once you understand the foundation of how it's measuring where we're getting buyer exhaustion. I mean, look at this wick on this candle that came down here. I mean, it was just boom. It was exhausted, but then we continued. We got that second leg. So this is drive 1, drive 2, but we didn't get the third drive. Third drive would have been down to the 200-day. So now that we've pretty much taken off all of this buyer's euphoria that occurred here. So realize this push, this euphoria by this back test in the 50-day is gone. So there's the emotion there of being overbought is gone, right? Now, if we come and look at today's RSI, we're at about 50% back. We are not overbought here at all. No. We're just above the 50-day, just above the 50-day. Equality is closer to maybe 69, 68, 50 from where we are today. And, today we're at 59.20. So we got quite a few points. We got 20% upside from where we are here. So, as long as that 2 holds, we should be heading towards this target one around 494771. At that point, we're going to decide whether we stay very euphoric. Now, this trajectory, I'm going to come in here and put a speed line in here on this new slope, because I think this becomes our new slope, which is much steeper than our prior slope we ran through a few minutes ago. So, at this point, the way I'm looking at this, our current trend support is a close below 4160.39. Until that is broken, a weekly close, actually a monthly close below 4160. Let me go see what my weekly would be if it would be any different. Bear with me. I've got to make this. Time frames are challenging at times. So yes, it's consistent with a weekly. So a weekly close below 4160.39 is pretty much where our trend support is. That is your friend until the end. That's it. That's all there is to it. I just wanted to spend a few minutes and drill down on the S&P because I think it's important for us to go out periodically, look at the larger time frame, start from scratch, rework the chart and say, hey, where am I right? Where am I wrong? So, I'm wrong on the bullish side on a close below that 4160.39. At that point, until that occurs, we're in an uptrend, folks. Great trading. Until next time.